Welcome back to the Explainer. So, after that absolutely massive volatility we saw ripping through the markets in our previous breakdown, we're actually walking into a completely different kind of environment today. This time, we're diving into the GoldMining Ninja trading documentary for week 22 of 2026. If you've been tracking the journey of this algorithm with us, you already know the drill. We look at real accounts, we look at real risk to document real progression. And honestly, week 22 delivered an absolute masterclass in why, sometimes, the absolute most profitable move you can make in the markets is just to sit on your hands and exercise extreme patience.
Look at that number. Exactly one single trade was executed by the algorithm during this entire reporting period. Now you're probably wondering, why so quiet, right? Well, think about the broader USDJPY market context we were dealing with. We had shifting Federal Reserve rate expectations, those treasury yields were bouncing all over the place, and we had ongoing commentary from the Bank of Japan causing some serious yen weakness and overall market uncertainty. So in the face of all that noise, the algorithm didn't try to force a setup. It demonstrated extreme discipline. It literally just waited on the sidelines until the math aligned perfectly.
Chapter 1. The Microanatomy of a Single Trade.
Okay, let's zoom in on the exact setup that triggered our one and only execution for the week. What we're looking at here is the 15-minute chart for the US dollar versus the Japanese yen. Check out that incredibly quiet, consolidating market phase right after a period of pretty wild fluctuation. Right there, marked by that little blue arrow, you can see exactly where the algorithm finally decided to engage. It didn't try to be a hero and catch a falling knife during those deeper dips. It waited for a confirmed micro-trend upward to execute a highly calculated buy order. Precision over panic, every time.
And to back that up, here is the literal MetaTrader 5 receipt for that exact trade. We've got a 0.06 lot buy order. It yielded a gross profit of 13.43 cents plus a positive swap of 2.09 cents, bringing the total net profit to exactly positive 15.52 cents. No hype, no exaggerated crazy claims. This is just the raw, mathematical reality of an algorithm doing exactly what it was built to do.
Chapter 2. The Philosophy, Capital Preservation.
Let's actually pivot away from that minor profit for a second and talk about the massive risk that was successfully avoided. Because here's the absolute crucial point. Capital preservation can be just as important as profit generation, period. It's a foundational pillar of this strategy's entire logic. When Fed whispers and Bank of Japan interventions are threatening to totally whipsaw the currency pairs, the goal isn't to hit a home run. The goal is to protect the portfolio, maintain a low market profile, and simply survive to trade another, far more predictable day.
And the actual risk metrics prove this perfectly. On the left, you've got the drawdown chart for the week, and on the right, the deposit load. I mean, just look at those lines. They're practically flat. We are talking about a maximum drawdown of a microscopic 0.10% and a deposit load peaking at just 0.02%. The algorithm essentially flatlined its risk exposure entirely. It's just brilliant visual proof of the strategy's uncompromising risk control.
So, summarizing the week's micro results, we walk away with a total gain of positive 0.22%, with that tiny maximum drawdown keeping our capital completely safe, and all of it from just a single trade. Now I know, a 0.22% weekly gain might sound incredibly humble, but in the world of realistic algorithmic trading, this is a definitive victory of calculated patience over reckless hype. It's all about surviving the volatile weeks so you can actually thrive when the trending ones hit.
Chapter 3. The Macro, zooming out to the bigger picture.
Now, I want you to look way beyond these quiet weekly stats to see the cumulative power of this discipline. 201.42%. That is the shocking contrast here. While a single week might yield just a tiny fraction of a percent, the lifetime growth of this account right now stands at a massive 201.42%. This is the ultimate proof that boring, consistent micro-actions paired with relentless capital preservation actually build spectacular macro results over time.
Take a second to really absorb the long-term upward trajectory of this lifetime equity curve. Because remember, this entire journey started as a humble $25 cent account challenge. We started at just 2,500 cents. Today, the balance remains incredibly strong, sitting well above the 7,000 cent mark at exactly 7,083.12 cents. The blue line you see represents the balance, and the purple line is the equity. Notice that steady upward stair-step motion? It's weathering all sorts of different market conditions without any catastrophic dips.
If we break down the lifetime stats even further, we can really validate the algorithm's long-term edge. Look at the green side of this donut chart. That's a super resilient positive 10.73K gross profit. And yes, of course there are losses, represented by the red 5,178 cents. But that's an expected part of literally any real trading system. The key here is that the profit factor clearly outpaces the loss, cementing a total net gain of over 4,800 cents so far. The system works because it fiercely limits the damage when it's wrong, and it fully capitalizes when it's right.
Chapter 4. The Future. The Road to $100.
This explainer series has always been driven by one really clear core thesis. True algorithmic trading is absolutely not a get-rich-quick scheme. It is about real accounts, real risk, and real progression. Week 22 might have delivered only a small gain, but it demonstrated the exact discipline, the patience, and the heavily controlled risk management required to actually survive long-term in the Forex markets. Honestly, it's the quiet weeks like this that ensure the account is still alive and kicking to capture the major trends of tomorrow.
So the journey started at 2,500 cents and we have successfully crossed 7,000. Our ultimate objective right now is the 10,000 cent milestone, a cool $100. And as global markets continue to shift and stay volatile, this algorithm is just going to be waiting patiently. Which really begs the question, in a market completely fueled by emotional reactions and overnight hype, is absolute robotic boredom actually the ultimate trading edge? Thanks so much for joining me for this explainer, and I really look forward to unpacking the next stage of this incredible journey with you.